Good morning students, welcome back to today's class. Today we are going to see that depreciation, provision and reserves, chapter number 7, video number 6. Today we are going to see that the straight line method and written down value method, how to solve or how we can find out that depreciation according to straight line method. First we can see that straight line method. According to straight line method, how can we find out that depreciation? Here is a very simple formula to find out that depreciation. Depreciation is equal to, what formula is it? Cost of asset. Cost of asset minus residual value this is estimated next residual value, okay, that we are estimating upon estimated useful life of the asset. Estimated useful life of the asset. Useful life of asset. So very simple formula only, depreciation. In order to find out depreciation under straight line method, we use this formula. Depreciation is equal to cost of asset. Here cost of asset means you understand that not only what the price we purchased, its installation charges are also included with that cost. That is for us, that is the cost. Okay. From here minus net estimated. Here one more word is that estimated. Estimated residual value. Here why we I add that estimated means that may not be that exact value. Just we are estimating how much, or we assume that this much may be. You understand? No? That is why that estimate is important. Means we cannot get that this cost we can get that exactly. That means how much cost we purchased plus installation charges. So we get that exact value. But here around value only we take. Means we are assuming that this much money may remain, or this much value may remain after this much long years. Clear now? And the upon estimated useful life of that asset, the same asset. So here also we are estimating. You understand now? Yes. Here also we are estimating. That means we will not get any exact year. Then we assume that this many years we can make use of this asset. After that year, its value come up to this much. Clear now? When you solve one, or when we solve one numerical problem, we will understand. And rate of depreciation, if you want to find out that rate of depreciation, we find it that annual depreciation amount upon acquisition cost into 100. In order to find out that rate of depreciation is equal to annual depreciation amount upon acquisition cost. Cost into 100. Here acquisition cost means cost of asset itself. There is no difference. Here acquisition cost and cost of asset both are same. So annual depreciation means in 1 year how much depreciation is there, and how much is the total cost of that asset finally into 100. Then we get that how much percentage depreciation is taken in each year. You got clear now? In order to find out that rate of depreciation, we use this formula. Rate of depreciation is equal to annual depreciation amount upon acquisition cost into 100. Here acquisition cost means the cost of asset itself that we are dividing with the 1 year depreciation amount. In 1 year, how much depreciation is there? On that, we say that this much percentage depreciation is taken this asset. That means sometime we get that rate of depreciation. From there, we need to find out other things. You understand, no? So here is a numerical question. For example, that question is like this: the original cost of question is here. Considering for the example, the original cost of the asset is rupees 2,50,000. The useful life of the asset is 10 years and net residual value is estimated to be 50,000. Now the amount of depreciation to be charged every year will be computed as following. So here you can see that one asset value is given. That value of that asset is at 2,50,000. That means total cost is given this much only. With that installation charges including all, we got that 2,50,000. And its estimated value, expiry year is given 10 years. And after 10 years, how much value is assumed for that asset is at 50,000. This is just assumption only. These two are assumption only. This is original cost. We have seen that this asset can be used for 10 years. And after 10 years, if possible, we can sell it out of 50,000. That means this much value may remain. So from here, we need to find out that depreciation. To find that depreciation, we are putting that is in the equation. To find out that depreciation under straight line method, we use that depreciation is equal to acquisition cost of asset. That means acquisition cost minus net residual value upon estimated useful life of asset. Here everything is given directly. So we no need of worrying about that. We can directly put in the depreciation equation. Depreciation is equal to 2,50,000 minus 50,000 upon 10. Then next step we can do that 2,00,000 upon 10 upon 10. 20,000. So its depreciation in every year is at 20,000. Clear? No? Got it? No? Very simple. So you need to understand that if here this value is included with the installation charges, not repairs and maintenance, installation charges. Once we purchase it, then we need to make it ready for use. Not only we purchase it, ready to use. Up to that condition, how much expense we paid, then all is included to that asset cost. Then overall that we call as the asset. Here it is given directly. Clear? No? Next is that it's a rate. If we want to find out that rate, how to find out that rate? Here we already find out that annual depreciation amount. Rate of depreciation is equal to annual depreciation amount upon acquisition cost into 100. Here annual depreciation amount is given 20,000 upon acquisition cost is at 2,50,000 into 100. Then how much will get? 8%. 8%. That means yearly depreciation of this asset is at 8%. Clear? No? You got clear, no, all of you? Very simple.